Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher because of the dynamics of the ETF and other stuff. I'm pegging
Right.
Ethereum between 15 and 20,000. And I'm
Okay.
pegging Solana between 750 and 1,000.
Wow. Okay, that's a big move for
Yeah, so I
Solana.
think it's the relative
But
outperform. So my view is
right.
Bitcoin starts the cycle and outperforms in the start. Then people go out the risk curve. ETH, we're going to have an ETH ETF. We'll see the market pick up there.
Right.
But the
Right.
horse that's moving faster is the one that's coming from a smaller adoption base. It moves
Yeah.
faster.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin ETF and other crypto. According to Raoul Pal, Bitcoin gets closer to 250,000 by the end of this run. It might be because Raoul Pal think a lot of people are more higher because of how the ETF works, and other things Raoul think Ethereum will be worth between 15 and 20,000, and he thinks Solana will be between 750 and 1,000. Bitcoin starts the circle and does better at first. Then people go, we're going to have an ETH ETF, and the market will pick up there. But the horse that's moving is the one that goes faster, is the one that has a smaller base of users. These things don't work as well in the digital age because anybody can send you Bitcoin right now. But it would take a long time it is very physical to change who owns gold, or we can move paper rights around, which kind of goes against the point. So gold will be fine in the same world is there to save you. It just isn't doing its job as well because it doesn't have this technology super cycle. That's why Raoul Pal like crypto more than gold or silver. But you're right that they're all different ways of saying the same thing. And lots of things Raoul Pal discuss. So please watch the video to end. And share this video and subscribe our channel, Everyday Finance. Thanks.
Let's look at those two component parts, main parts. One was the debt cycle. That's not changing. In fact, the governments are issuing more debt to pay the interest on the previous debt. And that's pushed interest rates up and it's made it even harder. So the debt keeps going up. Okay, so we haven't solved that one. And it's just accelerating because we're now having to pay the interest on the COVID bond issuance, debt issuance. So it's going vertical right now. So we know they're incentivized to continue this path. On the other side is, are they going to debase the currency? Well, they've been doing the opposite. In 2022, why crypto had such a bear market, as most things did, is they were taking liquidity out because there was inflation. So here we are, where if we look at trueflation, which is an on-blockchain measure of inflation, it's at 1.4%. So inflation's come down. It's not the boogeyman anymore. Growth, interest rates are too high for that kind of environment at 5.5%. So the probability is they're going to lower interest rates. We're seeing China in an economic mess. They've got a full debt deflation going on. Same issues, aging population, high debts, everything's blowing up. They're likely to stimulate further. The Europeans are likely to end up stimulating further, and eventually the US will stimulate more as well, because they need to get growth to pay for these interest costs. So that is what lies ahead. And then we've got the other sweet spot in the middle of this, which is politicians hand out candy during elections. And the candy that everybody wants is stimulus. So they will hand out stimulus, which needs to be paid for. It either ends up on the Fed balance sheet or some other liquidity measure to allow the government to fund itself. So what we've got is a high probability that our money is going to be worth less. Asset prices are going to rise, but our wages won't, which is the big problem. So our future selves are getting poorer because we can't afford as many assets. And we've got this massive wave of debts to be refinanced. So that's normally a very positive backdrop for crypto. Lots of liquidity, and liquidity is what drives all markets, but crypto is the supermassive black hole that sucks in so much capital when this happens.
According to Raoul Pal, take a look at those two main parts. One was the debt pattern isn't changing. In fact, governments are taking out more debt to pay the interest on the old debt that made things even harder by raising interest rates. So the debt keeps going up, so we still haven't fixed the problem, that one. And it's getting worse because we have to pay interest on it now, about the COVID bond issuance debt issuance. So right now it's going up. So we know they have a reason to keep going with this. Another question is whether they will debase the currency in 2022. They did the exact opposite, which is why crypto won. Most things did when the market was so empty. They took money out because of inflation. So now we are where trueflation, which is a measure of inflation based on blockchain, is about 1.4%. So since inflation has gone down, it's no longer the scary monster interest rates are also too high for growth at 5.5%. So it's likely that they'll lower interest rates. This is what we're seeing in China. They have a full debt deflation going on and the same problems with an aging population and high bills going off. They're likely to boost things even more, and the Europeans are likely to stop up stimulating even more. And finally, the US will do the same because they need growth to pay their bills for these interest costs. So that's what's coming up. Then we have the other sweet spot in the heart of this, which is that politicians hand out candy during elections, and to get people to hand out stimulus, they will give out candy that everyone wants this has to be paid for. So either of the Fed or some other measure of cash to let the government pay its own bills. So there's a good chance that our money will be worth less, prices of goods and services will go up, but wages won't. This is the main problem. Let's back to the Raoul Pal interview.
So the average citizen's not going to be okay unless they take action. This is why people are angry, whether you're on the left or whether you're the right. You're angry because the system is failing you. And what's happening is you're a wage slave and you can't buy a house. Or you can't invest as much of the stock market that your parents could do. You just, A, cost of living is high, but B, asset prices keep coming up. And that's because they're debasing the currency. And what debasing the currency is, it sounds like a complicated economics term, but what it basically means is they're robbing you of the power to buy assets. It's been on average 15% a year since 2008. So you're losing the ability to buy assets by 15% a year. So each year you sit on a pile of cash and don't buy a house, that house is roughly going up at 15% a year. That's bananas. You sit on cash for 2 years or you don't have any savings, it gets more and more expensive. What they're actually doing here is taxing you, but by hiding it. It's like a socialization of all of this costs. But what's so massively unfair is it disproportionately hits people who are wage earners who don't own assets. So you and I, we have assets. And so your assets offset that maybe your wages, your income doesn't rise as much. But for the average person, they clock in, they go to work, they come home. Even if you're a dentist or a doctor or a lawyer, you're still in the same boat because your wages are not rising as fast as asset prices. So your future self gets poorer, because what an asset is, and it can be the same for Bitcoin or gold or real estate or equities, it's a way of putting your savings into something that you can get them back in the future. So it's your future consumptions, your future life is in those. But you can buy less of them, so your future life is getting poorer. So everybody's getting screwed over here, and they don't understand why. Fancy words like debasement come along. It's like, I don't really understand what that means. It means they are robbing you of the power to use your wages to gain an advantage for yourself later in life. You're dead right, is that people don't understand because it looks like their stock market, their 401k's gone up and all of this. But that's only a small percent. That's like 10% of the population who have assets. And those people are very happy with it. The more assets you own, the more powerful you are, the more assets you probably own, the less likely you are going to call the authorities into question. The average guy working in Cincinnati who suddenly can't make his ends meet and can't buy an apartment, what voice does he have in this? And he's being taxed at 15% a year, and has been 15% a year, and he has been since 2008. And he just doesn't understand what's going on. He doesn't know who to blame. So what they blame is one party or the other, and it's not.
For the markets.
So my advice is, I spend a lot of time, I haven't talked a lot about it, but I spend a lot of time looking at the macroeconomy and what is going and where it's going to drive assets. And my view is that the issues we've been talking about, printing of money, excess debt, are going to be the feature of the next 2 years. How do you pay for that? And so therefore, I am very aggressively positioned in crypto, because the only other secular trend there is, I can divide any asset like the S&P 500 or real estate or gold by the central bank balance sheet, the Fed balance sheet, i.e. how much money are the Fed printing or putting on their books. And most of them are pretty flatline. Then you look at the NASDAQ and it's going up because we're getting more digital every day, so there's endless demand. And then crypto goes up exponentially, as we know. So the fastest horse in the race is crypto. So I'm actually 100% of my liquid net worth in this. And I have been actually since 2020. And I use the bear markets to add into, because I think we are in a once in a lifetime wealth accumulation opportunity for everybody. Be you rich or poor, you can still put 10% of your savings in as you go. And so that's how strongly I feel about it. It's not just a passing interest. It's not something I say on TV. It's something I actually truly believe in. My view is that Coinbase has 110 million accounts. They're not all the US. Let's say 50% of the US. It's probably more, of which there are about 12 million actives, and I think that'll go up. So think of those as the voters. So there's a swing vote here of somewhere around 10 to 20 million voters probably who care about this enough. So
yes,
that probably matters reasonably. Yes. You need to look at the distribution of crypto owners. Are they all on the coasts? I'm not sure. I think it's pretty evenly split. So I think it would help the Democrats. I think whoever's going to take it, we've seen RFK take it. So that's the independent. We've seen the Republicans haven't fully embraced it. Vivek did, but we don't know where he's going to shake out. Trump's obviously made the NFTs. He hasn't made the I Hate Mooch NFTs yet, but I'm sure they're coming. So look, gold and silver have always played this role that Bitcoin does. It always will do. It is a global store of wealth. Gold is probably the world's true global currency. But what we're finding is in a digital age, they don't work as well. Because I can send you Bitcoin in a few seconds, but for me to transfer gold ownership is a very physical process. Or we move paper rights around, which is kind of goes against the case for it. So gold will do fine in the same environment. It's there to save you. It's just not done as well because it doesn't have this technology supercycle behind it. So I prefer crypto than gold or silver, but they're ways of skinning the same cat, as you say.
All right, let's go to another question. If there are more questions, has the central bank fashioned its policy to purposely create and transfer taxpayer funds to the super wealthy?
No. They're purposely doing it to stop the assets blowing up. The reason being, our actual problem is actually demographics. There's too many old people. And the old people all own equities. And they also have all the wealth. So if you were to allow the market to go down 70% that people want, we want that bear market to show the bankers that they've done it wrong, we wipe out 70% of the wealth of America. You simply can't do it. And that's the collateral for all of the debt as well. So you blow up everything. That's what we learned in 2008, which was like, they're not going to go there. That was what Draghi did in 2012. It's like, whatever it takes, but we are not going to do that, which is the 1929 outcome. So what they're actually trying to do is rescue the baby boomers and rescue the governments who are trying to keep economic growth going with an indebted old population. So they're not trying to transfer money to the super wealthy. That was the unintended consequences. I don't think they understood what they were doing was debasing currency. And when they learned it, they're like, oh, this is magic. Let's just keep pressing the magic button. Assets go up and we're saved from ever a debt deflation.
According to Raoul Pal, The truth is that you're a salary slave and can't buy a house, or you can't put as much money into the stock market as your parents could because the cost of living is high. But the reason asset prices keep going up is that they're devaluing the currency. Debasing the currency sounds like a hard economics term, but it just means that it has been about 15% a year, taking away your ability to buy goods since 2008. You've lost 15% of your ability to buy assets every year. This means that every year you set aside some cash and don't buy a house. The price of that house is going up about 15% a year. That's a lot of money. It gets more and more expensive. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.